Hello and welcome from Trend Signal for our review of the data and events the week beginning the 26th of January. News overnight, that's Sunday night that is, dominated by, of course, by news of the Greek election, the extreme left-leaning, anti-austerity, another good description of the party. Syriza has won the Greek election, winning 149 seats, just short of 151 for an overall majority, but the view is that they'll have no trouble getting support from one of the other smaller left-leaning parties. The reaction Sunday night was a sharp sell-off in the euro and a more modest fall in equities. So I probably expect the effect to be fairly limited and muted, as the euro is already feeling the effects of the quantitative easing announced in the Eurozone on Thursday. Markets last week were quite upbeat, certainly equities were. The FTSE had a very good week, actually up over 4%. US markets, a more modest move of around 1.5%. The German DAX up 330 points, just over 3%. But the big move on the downside was obviously the euro. That fell 330 points, or just about 3%. Sterling actually it's also a little bit weak against the US dollar, falling about 1.4 cents, just under 1%. But in fact, sterling held up quite well against the euro. In fact, gained ground against the euro, falling the euro falling about 1.75 cents, or about 2% against the euro. Gold still remains quite a sort of safe haven for now, up $15 last week, and Brent crude still continues to fall, falling last week about $1.20. Modest fall, but remember, with the price down as low as it is, even modest falls now are still quite large in percentage terms. That's 2.5% fall last week. So undoubtedly last week the QE was the big event, a lot more than markets were expecting. 60 billion per month for 19 months until September 2016, I believe. Immediate effect was to hit the euro and equities. Euro fell and equities rallied on the back of a weak euro, which is obviously good for exporters. Bond markets, unlike the shock and awe that happened with US and UK QE, this Eurozone QE has been so well telegraphed. The markets have had a lot of time to react to it before it actually happened. So there wasn't such a lot of fireworks in the bond markets. We'll have to see. The lasting effects of QE, well, we expect continued weakness of the euro, certainly a move below 110, possibly with a target of 107. Got to remember, actually, in 1999, the 1st of January 1999, when the euro was launched, we actually fell from there down to a low of 0.82 versus the US dollar. So the euro has got a lot of room on the downside, and many southern Eurozone members might argue, and that I include Spain, Italy, Portugal, and indeed Greece, if they're still in the Eurozone, might argue that the euro has been way overvalued for the last 10 years and should be below 1-to-1 anyway. I guess you could say watch this space. So with the election out the way for now, obviously there's going to be some negotiations between Syriza and the Troika regarding the debt. But already comments have come out. We've seen a comment from a member of the ECB saying that Greece must repay its debt. But for an anti-austerity party, stick to their pledges, there's going to be something we'll have to give. And potentially Greece could be in default. But the negotiations will take weeks, so there's no point trying to guess how they might go. All I would say is that I think a lot of banks that were originally exposed to the Greek banks are no longer so. The last time we had the Grexit discussion was in, I think, February 2012, so the banks have had a lot of time to prepare for that in terms of insulating themselves from any negative effects of a Greek exit. So let's just have a look at the data coming out this week. Australia Day, that's already passed. We've already had the German IFO business climate. Things will start to improve in Central Europe, in the Eurozone, as the effects of oil is felt. We've got GDP data in both the UK and the US. the first reading here in the UK, 0.6% we're expecting for fourth quarter. Durable goods orders in the States, also an important number, the core number excluding the more volatile components. 0.6%, it removes some of the sort of really big aircraft orders, for example, so they stripped that out. 0.6%, hot on the heels of a poor number from the previous month, which was actually 0.4, down to revise to minus 0.7. The main event really of the week will be the FOMC meeting on Wednesday, concluding at 7 o'clock in the evening with a statement. Obviously, the Fed will not be doing anything. We've already, or the markets have assumed that with slightly softening numbers that the rate moves this year as anticipated will have been put back a little bit. So beyond June, so nothing will happen before June is the expectation. We then jump to some inflation data out this week on Thursday. The German CPI expectations now minus 0.8%, so that's a significant fall in prices and will underscore the reasons why the European Central Bank has indeed gone for the big one in terms of QE, double what the market was expecting. The overall estimates for the whole of the Eurozone minus 0.5%, and the worry for the ECB could be that deflation sets in for the long term. But I think a lot of it is down to what they call supply side deflation, with the price of oil, the main culprit now, pushing prices into negative territory. And then we have, to finish off for the week on Friday at 1:30, we then got the first reading of GDP for Q4 in the US, 3.1%. A lot more modest than the roaring 5% in Q3, which was revised up from 3.5%. So the dollar strength continues. More to the point, the euro weakness will probably continue. I think it was a bit overcooked overnight following the Greek election. I don't expect that to create so many ripples in the markets, really. There's going to be a lot of chat going on about that. Equity markets will be well supported, especially the Eurozone equity markets with the weak euro. Thank you very much for listening. Update next Monday. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.